Friends, the levee finally breaks. What I mean by that is that Ted Macklin has finally eased interest rates, marginally 25 basis points, which is 0.25%. However, he's finally done it. It was a long time waiting, and it was long overdue. So Tim Hudak, who's the REIA CEO, the Ontario Real Estate Association Chief Executive Officer, has been lobbying on behalf of realtors across Ontario to the federal government to have interest rates lowered to help home buyers purchase homes, first-time buyers, and also help buyers that are in homes continue to be more affordable. Arguably, for most people, their home, their principal residence where they live, is the most important purchase that most people make in their entire lifetime. So having interest rates lower just makes sense in a number of ways. Now, let's look at May stats. Well, in May, it was the lowest number of sales in 15 years. And you're wondering why. Well, predominantly, it's because the higher interest rates prevented buyers from qualifying, along with all the other unnecessary restrictions, such as the artificial stress test for first-time buyers, putting down less than 20%. Why do they have to qualify for 200 basis points above what the real interest rate is? Like, that thinking is shrinking thinking. Government put it into place back in April 2017, and it's like they've fallen asleep. It doesn't make any sense. We have to wake them up. We continue to lobby to have them eliminate that artificial stress test, like work with reality, and hopefully they'll do something about it. Now, what happened to prices in May? Prices eased up marginally, 0.82%, or $9,524 to $1,165,691 from the month before. Now, what's interesting about that trend is that it is a continual increase, consistent for all the months in 2024 so far. So that shows us, despite the higher interest rates, there's more buyers that want to get into the market, but most of them can't. That's just a fact. They can't, especially first-time buyers. We know that well over 80% of them need families' help to get into the market. And it's a sad commentary. That's the reality is. So we have to take a look at ways of increasing housing accessibility and affordability, not just affordability. So active listings were up dramatically, over 20%. And also the solds were down, again, for those combination of reasons. New listings were up quite a bit, 9.86%, which is 1,671 new listings on top of the other inventory that didn't sell. And there's more and more houses not selling. In fact, at these projected rates, there'll be well over 100,000 properties that get listed that don't sell this year. Just a fact. Just looking at the trends. So yeah, this is what the radio doesn't, this is what the media doesn't tell you, because this information is not public information. However, I think it's important for you to know. I believe in transparency. So now, monthly sales were 7,013. It was the second lowest May sales since 2009. So when you take a look at the graph, it's pretty revealing, right? And then you took that average prices, which we already talked about, edged up slowly because of the burgeoning demand and the pent-up demand. The number of listings was the third highest, 21,760 active listings was the third highest in the last 15 years. So if you got more supply and you've got less demand because artificially, because people can't qualified to get into the market, what happens is you have procrastination and they just can't move ahead. Anyway, I look forward to your comments, and we're always here to help and empower you to build more freedom with homeownership. God bless. Thanks.